So we just heard from Rebecca and John about the courage that it takes to go beyond the profit, the moral imperative to lead courageously in service of people and the planet. Well, now we'll actually zoom into what that courage looks like in business and in financial markets. How do we actually do this? So in this session, we'll be talking about what it takes to build the business models for the economy that is resilient, that is equitable, and that is designed to thrive within the planetary boundaries. And I'm joined by a group of leaders who are working on exactly that. And I know in this room, we have many more of you. So I hope this conversation will inspire future partnerships and collaborations. So let me briefly introduce this fantastic panel. Sophie Flak, to my right, is a member of Eurazeo's executive board, managing partner for sustainability and impact, where she leads their sustainability and impact strategy, as well as Eurazeo's digital transformation. She is driving capital allocation towards safeguarding the planetary boundaries and fostering a fairer society across the firm's 35 billion euro portfolio. Matt Christensen is a global head of sustainable and impact investing at Allianz Global Investors. Matt is shaping the future of sustainable finance at one of the world's largest asset managers. In fact, his team helps ensure Allianz GI's more than 500 billion euro of asset under management, that this is aligned with financial returns with impact across climate, nature, and social equity. And Isabelle Hoepfner-Léger is General Secretary at REXEL and a member of the Executive Committee. She's driving sustainability, HR, and governance at the company. And as we'll be hearing later in this discussion, she's actually helping rewire how a global distributor influences both supply and demand toward low-carbon solutions, so the entire ecosystem. Before we dive into the conversation, let me just briefly set the scene and bridge from the conversation that we heard earlier to the conversation about business models so early in the morning. So where do we stand today? According to the recent study by the UN Global Compact and Accenture, this is a CEO study from this year, 88% of global CEOs believe that the business case for sustainability is stronger than it was 5 years ago, so stronger than it was in 2020. And 99% plan to maintain or expand their commitments. So the intention and the commitment is there. Yet, too few are transforming fast enough, as we heard earlier. Gartner research found that just 38% of the business leaders have embedded environmental sustainability into their decision-making that is driving the business, and fewer than 10%, that's 1 in 10, have fully realized the benefits of that. So moving beyond the good intentions and commitments and goal setting to real results is hard, as Rebecca said. But the leaders who are moving, they are rethinking how value is created and for whom. They're embedding sustainability into core business not as a cost center, but as a competitive advantage and a new value creator. And they're redesigning for long-term resilience, not just for quarterly returns. So that's what this conversation is about. To kick us off, I want to build on this fantastic theme that we have this year, which is courage. Courage to lead. And what is one courageous move or a bold bet that your organization is making to build a more resilient, purpose-driven business model? So let's start, Sophie, with you in one sentence, just briefly.
One sentence. Anybody who knows me knows it's impossible. Well, hello everybody. Well, to try to keep it brief, we don't do bets. Sustainability or impact is not about bets. It's about investing for Eurazeo based on what's physically and scientifically happening in the world in which we live.
Thank you, Sophie. We'll get into that later. Courageous move, Matt. You sit in capital markets.
So good morning, pleasure to be here, 20 years of celebration. I think probably given what we're facing as an institution where I sit, it's about being consistent in an inconsistent environment. So from a capital allocation perspective, it means continuing to allocate and keep our policies around sustainability, whether it be social equity, whether it be around looking at planetary boundaries or climate change. You'll see a lot of investors have tapered off. John mentioned it a little bit about getting glib and sort of taking a step back. We have consistently stuck to the message and show that in terms of the companies that we engage with and the way that we vote on our resolutions.
Isabelle.
Thank you and welcome, and good morning to everybody. Yes, keep going and stay focused. This is what we have in mind right now. We are a distributor, B2B, in the middle of the value chain. I personally seek courage in resilience. I'm a marathon runner, maybe that helps. And actually, we took the responsibility to look around us and to embed the whole value chain into our commitments, our suppliers, our customers. And we all stand, and we will help everybody in the value chain to stand by what we really believe for the future, which is low carbon electrification.
Great, fantastic. So what we heard just now, which we'll dig into over the next 20 so minutes, one is staying the course. Second, moving the entire ecosystem, not just your own company, if you have that opportunity. And then third, really making strategic investments that are based on physical realities of the changing planet. Now, before we talk about some of the examples, I think it's really important to acknowledge the challenges. Transforming a business to be truly sustainable, to be climate resilient, to be planet positive, often runs into barriers, whether it's legacy business models, misaligned incentives, short-term KPIs, regulatory headwinds. What is one barrier you faced in your work, and how are you tackling it? Sophie, back to you.
Well, to refer to what was said in the previous panel, we all know how complex and how long it can take to drive change. And I've been working in the sustainability space for the last 20 years. And I would say that the biggest roadblock or issue we face is confusion. People do not understand what is sustainability. And as much as I like to hear talking about heart, love, kindness, and I understand where this wants to go, I believe we need to stay extremely realistic about where we are operating, personally, professionally, and as a citizen. And if you want to drive change, you need to have a very clear vision, and you're saying stay focused, or where you want to go, but you also need to be extremely realistic, or what are the swallowable, digestible steps that you can take. And when you work in a company, I've been working in corporates for more than 2 decades now. The reason why the sustainable programs or impact investment program I've been working on are successful is because I've always been playing with the rules of the game, but bringing it an addition, meaning that everything I do in sustainability aligns with performance and profitability. And to me, this is the swallowable step which is available today. It's going to change very quickly because of the physics of the world. But so the biggest issue I've been facing is this confusion that sustainability should be about profitability, should be about philanthropy versus profitability, when it is totally the opposite. And you can combine sustainability with performance, and it's going to improve. And the reason for it is that working in that space for the last 2 decades, you know, when we were talking about a changing world, we were saying, guys, we're going to face this and that, but it was like in books or in scientific analysis. But today, we are seeing the physical impact of the changing environment, and it's becoming very real. So business practitioners need to protect their assets, need to rethink the way they operate because of mega fire, because of floods. Just give you a real life example. We have a plant which is 20 kilometers from the mega fire in Los Angeles. So we are not opposing sustainability and profitability, we are protecting our assets. So let's try to move away from this confusion if we want to make things happen faster.
Yeah. So sustainability is not philanthropy, it's really about risk management, and also it's about the opportunity for long-term value creation, for profitability. Isabelle, I'd like to go to you to understand what is one barrier that you faced at REXEL?
The big barrier that we found is that it's really the absence of any clear business model. Sustainability is not only virtuous, it's also a strategy. As you say, we don't make bets, we just keep our companies running and keep jobs for our employees. And the absence of any clear business models makes you feel uncomfortable at the beginning to find the right facts and figures to move forward on the topic. So this is again where we thought, where are we? We are in the middle of the value chain, a little bit squeezed between our suppliers and our customers. But we decided that instead of seeing it as a limit, we would see it as a big opportunity to make an impact. So we considered that we should be catalysts, influencers of sustainability into the whole value chain. And we turn towards our suppliers to develop specific offers to make sure their innovations are brought through us into the market. We turn toward our customers to see what they want or need because they have their own obligations and commitments. And we made sure that we find over the 17 countries where we're in, and according to the specificities and the maturities of each of these zones, where we can bring additional products or services linking our suppliers' new innovations to our customers' needs. This is mostly it.
Thank you, Isabelle, for also bringing to life this, one, not just the importance of the business case for sustainability, but also how do you bring that to the level of the key stakeholders, whether it's your customers or your suppliers, your partners, but what does that actually look like on the ground, and what's that transformation or transition? Matt, from where you sit at Allianz Global Investors, what have you seen as one of the biggest barriers to really transforming business to be truly sustainable, and how have you tackled it?
When you're sitting in a financial services company, they tend to be very risk-oriented, and therefore they're not career risk people that want to do lots of, let me take a chance. It's not the norm of the culture of companies in general, not just Allianz when you look at financial services. When it comes to our topic, sustainability, what I have found in terms of that barrier is how do you find the right trade-offs? A bit of what I'm hearing on the panel of you want this long-term vision, we heard it today with John and Rebecca, but you have to break it into bits and pieces to make it happen. A lot of sort of tackling almost through a strategic narrative, but a tactical implementation plan. And therefore, no one should be fully happy. That's my job. But there should be enough of moving it forward that things are happening with milestones. And so it means that from a sustainability angle, in a given company that we might invest in, we have to find the most material opportunity or risk that will move the needle. And we can't do everything. So I have a lot of NGOs that come and say they're not happy with X, Y, and Z because we didn't hit their pet issue. We have risk people inside that say, are you taking enough prevention in terms of how you're thinking this? And then we have the investors that say, it's not fast enough, we're not making money quick enough. And so the goal that we have as a centralized team to support all these different types of investment opportunities is how do we find the one issue per sector, per company? It has to be broken down literally to that level to make sustainability come alive. And with that way of doing it, no one's fully happy, but things happen. Change happens. Business models start to change. But it's sort of tectonic plates. It's not immediate. And so you do need that time cycle over, say, 2, 3, 5, 10 years to start to see which companies have best now made that strategic shift over time.
Yeah, Matt, thanks for bringing that to life. And also, another thing that is important to acknowledge is that all of this is happening in the context of regulatory environment. So you need to take that into consideration too. But this importance of really bringing it down to the point of action. And I want to really echo what you said is it's okay, be at peace with the fact that nobody will be 100% happy. We just need to move on and make progress. Sophie, I want to come back to something that you mentioned earlier because it is important to really understand, well, what does that look like at the point of action, which is, you know, confusion between sustainability and philanthropy and the need to reframe it as a long-term value creator. What does that look like in practice at Eurazeo?
So I'm going to start with a non-Eurazeo example. I used to be at the executive committee of the Accor Hospitality Group, and I was in charge of the group transformation, and I had the lever for the transformation, so sustainability, but not only sustainability. When I joined the group, of course, the carbon footprint was not available, and I went to see the guy in charge of, my colleague in charge of operations, and I said, well, do you know how much you're spending in energy? And he said, no. And when you manage a carbon footprint, first thing you go for, especially in hospitality, is energy. So I went out, collected the data, 4,000 hotels, 92 countries, took a little bit of time and dedication, and we ended up with 450 million euro per year. So I came back to my colleague in operation and I said, how about we start managing, then reducing this amount? Are you in alignment with me? And he said, yes, of course. And that's how we started to work on the biggest factor of carbon emission of the Accor Hospitality Group. So this is very much my philosophy, and I must say that, Matt, I'm going to be a little bit contrarian. I do believe that we can tackle more than one issue at the same time, not too many, but sometimes more than one. And at Eurazeo, that's exactly what we're doing. So I'm managing the development of all our impact product offering. So at Eurazeo, we build funds. Funds are financial products, so some build hotels, we build funds. And I'm developing, as we speak, what I call impact twins, because we operate in venture, we operate in buyout, we operate in debt, we operate in real assets. So in each of those asset class, I am developing what I call an impact twin. So it's the same type of product, we're going to finance the same type of things, but on top of having some financial objective, we are also going to have some science-based, sufficient enough impact objective, and we are going to deliver at least the same type of performance, but maybe better performance. So I'm going to go into real-life example because it speaks better. Our last product is what we call a buyout product. So it's financing some companies which have been existing for 10 to 15 years, because there is also a very big misconception that solely innovation could save us, meaning venture in my industry. Venture is great, innovation is great, but it won't cut it. So we are going out looking for companies which are 10, 15 years, profitable, and we want to turn them into global champion. In real life, what does it mean? Our first investment, and Matt, you're at the board, and you had a board meeting of that company because you're financing it as well. It's a company that does what we call biocontrol. Biocontrol is some small animals, or like acarians, who are going to eat pests on agriculture goods. So we are going to replace nature-based solutions to chemical-based solutions. the great news is that it's good from a carbon footprint point of view, it's good for the soil, it's good for water, it's also good for the health of both the farmer as well as for their business model as for the consumer. This company has been existing for 15 years. Biocontrol exists for 15 years. There are no technological risks, no R&D risks, no business model risk. What we are doing with our professional capacity, we are buying other companies and we are creating a global champion. And doing so, we are also improving the sustainability profile of the company. We are replacing plastic packaging by biodegradable packaging. We are driving a lot of improvement in the operations. So I could go and so on examples, but my job is scaling those companies, bringing it real effective solutions and make them be at scale.
That's fantastic. Thank you for bringing it also to life. And just one thing to emphasizing that the transformation of the economy to be climate resilient and planet positive won't be driven just by the new startups, and I work for one of them, but actually by the transformation of the existing businesses and really getting to the point of the products and services and how they operate. So we talked about innovation a bit. We have kind of 3 other key pillars of driving this transformation, which is people, and we'll get to that, capital, and regulation. And there's a lot of regulatory uncertainty today. Matt, I want to come to you and just understand what's helping Allianz global investors invest with confidence even when the frameworks, when the policy frameworks aren't ready yet.
So I would say that because they're either not ready or they're changing, I saw a leaked proposal to the change in the EU regulation that is going to be happening in these next weeks. It came out yesterday, the leaked proposal. And so it creates uncertainty in the market around sustainability. What I would say is that any investment manager, whether you be in the US, Europe, Asia, or somewhere else, you have to think through how do you envision regulation playing out over time to the best of your abilities? How do you do a scenario analysis? And in spite of it, how do you therefore create your own framework? Framework that you think will anticipate or be in line with the regulation, but that's going to help you do better investments over time. And what we've had to do is to think through, in light of disclosures that are kind of being diluted a little bit, certainly in the US, for example, how do we have the best way of gathering proxies by using, whether it be AI, it's been already discussed today, and or the relationships and the data that we've already built. And I just want to give one case, because I see the time is running out, to give a different one from Sophie. Sophie was a private market example. I want to give a public market one, of which many of you probably work for public market companies that are quoted in the different stock indexes. And that's where you have to be very specific and really, I think, on one issue. And so we had one of the largest food and ag and beverage companies that we saw was not, in our view, monitoring the risks very well on one area, and that was water. And they're subject to a lot of water risk. And when we would ask them, what are you doing to measure that? What's in your business model? They'd say, well, you know, it's something that we keep an eye on, but it's not really part of our incentives. And so what we did is we did 2 to 3 years, it was 2.5 years, to think through how do we do a value chain assessment of just water risk, because biodiversity connected to climate and social issues is going to be one of the biggest issues in the next 5 years. But it hasn't hit everybody the same way of understanding because it hasn't been made tangible. And so this is a great example in my mind of where you can say, how do you add value as an investor? How do you show it relates to a business model change, transformation, choose your one issue and go very deep with C-suite as well as board members to make it real. But the first call that we had with them, they said, are you a woke investor? And so we have to be very aware of what is going on in the market that we're dealing with about how to make this stuff real to get past the noise and build trust.
Thank you, Matt, for also bringing in this example of how do you take the role of the investor to flag climate risk and also help the company see the climate risk not just as something to be managed, but as a business opportunity. So a fantastic example. Isabelle, and yes, we are running short on time. You highlighted earlier the absence of a business case for sustainability, which is something that many companies face. How have you navigated this specifically at REXEL? And just keeping it relatively brief. Thank you.
I will. We'll rebound on everything you said. Small steps, very local, which is one of our strengths. We're a very local company, and looking at the whole value chain. So for example, you take your big suppliers and we create a specific offer for them to make sure that everything they create, which is innovative, which falls into the field of low carbon electrifications, we are at the forefront of selling it. Customers, we'll look at the different countries because the level of maturity is not the same. We have big customers, they have their own needs, they have their own commitments, they respond to public offers, they have to have specific products. So we build specific services like the carbon tracker that we did years ago, where we help them calculate the carbon footprint of the product they buy and sell. We have types of eco-scoring, where they know when they buy a product, if they can buy a product which is less emissive for the same price. All of these tools, so we don't wait for regulation. They're helpful when they're there. If we don't have them, we'll still keep going, as I said. We'll listen to the market, to the needs of our customers, and we deeply, deeply empower our teams because they are the ones on the field. They are the ones selling the products, and we're a business, people-oriented company. So we all these stakeholders around the room to make sure that we progress.
Thank you, Isabelle, for also highlighting the importance that you as a company play as an ecosystem builder and the influence that you can have. So those of you who are actually members, parts of an ecosystem, think beyond your own company and how you can help everybody transform. Now, the sustainability or the green transition is oftentimes talked about in the context of capital, which is what we're discussing here, innovation and policy. But nothing moves without people, and women are at the forefront of driving what's next. So we couldn't not talk about gender equity in the context of new business models. How are you embedding gender equity in your business strategy? So Matt, we're going to go first to you, then Isabelle, and come back to Sophie, and let's keep it relatively brief.
Some of you probably know the 30% Club, and this is something that we have been very, very big fans of in terms of watching it roll from different countries. But I'll give you one country where it was not present, Germany. I work for a German company. Germany's not known as a leader in terms of equity when it comes to gender, in terms of, if you look at just the management teams, supervisory boards are okay, but there's some work to be done when you look at it compared to other markets. And so we led with a few other investors the launch of a 30% Club in Germany. And we are now meeting with the DAX group of companies in the indices to talk about what are their plans around target setting, what are their plans around developing pipeline, because a lot of the problems we often see is the external hiring, but not the internal pipeline growth trajectory for women. And so this is something that we've found to be very important that we're doing in different markets, but that will be one that I view as one we're pushing very hard because it's a laggard in Europe.
Thanks, Matt. Isabelle?
One example, if I want to be short, we're traditionally considered as male industry, so we try to find women wherever we can. Nobody has cracked the model. But for example, in France, we are a company with a lot of sellers, people on the road selling the products. Not easy for women when they are young with kids because they want or need to stay home. But what about the women who have grown-up kids? And they don't need or want to stay home, then you can build a specific formation for them, making sure that they enter into our field, they develop their knowledge, their technical knowledge. We build 400 hours of building for them, and then we make it go with women who were not the first target, but that we found out because we looked for them.
And Sophie?
Well, Eurazeo is leading by example in our very conservative industry. And when I say leading by example, so you can look up our numbers, it starts from the very top. And I'm a member of the executive board. We are a top 3. We are very open about our religion, about our sexual orientation, and about our origin. And leading by example makes things, make people get at ease and open minds. But I would say what's the most important, and I think that this is what's happening today, it's making sure that women are invited to talk about business and not only about women/equity/diversity issues. So we need to raise our voice in business issues. And in that matter, I want to say thank you for the Women Forum to create this opportunity, because that's what's the most important if we really want to drive change.
Thank you very much. And just to close us off, what you heard today is that the future will be led not by those who tweak at the margins, but those who actually create and reshape the opportunity for the business, and who don't treat as equity as a checkbox, but as really the foundation for resilient teams and the future fit markets. And thank you, Sophie. Thank you, Matt. And thank you, Isabelle.